Let's talk about crypto arbitrage, right? So how traders extract a risk neutral profit and why arbitrage is really dominating the crypto markets right now. Crypto trading has definitely evolved as all things really look like the old model, which was simple, where you predict direction and you risk your capital and hope that you are right, is no longer the case, right? The modern kind of framework is a little bit different, where you're capturing inefficiency and you're actually hedging risk and locking in profits, which really is, in simple terms, what arbitrage entails, right? So institutions or prop firms or professional market makers don't just rely on guessing the price direction. They actually harvest spreads, which are tiny structural price errors across different exchanges, thousands of times per day, using bots, and retail traders historically can't compete because obviously those spreads disappear in seconds, and data tends to be fragmented between the centralized exchanges and the DEXs, monitoring requiring constant attention, execution, timing, measuring more than analysis as well. But at the end of the day, now you have all these tools, right, that have pretty much changed all that in terms of just giving you infrastructure that you can work to extract the value you can find with arbitrage trading, such tools like arbitrage scanner, and I'll be touching on some of those things today. So crypto arbitrage, for those that are new to it, you just have different exchanges. For example, the BTC price on one exchange is 1,000, 100,000, let's say, and then on another exchange it's 100,500, right? So you try to make a trade where you're buying on the first exchange, you sell on the other exchange, you wait for the convergence and you close the positions. And arbitrage has definitely exploded because in crypto you have that opportunity where you have centralized exchanges, decentralized exchanges, automated market makers. You've got all kinds of futures, perpetual markets, funding mechanisms, cross-chain, liquidity issues, listing delays, oracle lags that really just give you an opportunity to do arbitrage this way. So if you want to get started with Arbitrage Scanner, which is the tool I like to use, check the link in the description. At the end of the day, you just need to be able to understand that there are three essentially different types of arbitrage: spot versus futures arbitrage, which is seen as more of a core strategy for most people, where you're profiting, you buy the asset on spot and you short futures, right? So you profit from the price convergence, the funding payments. For example, you've got a trader who sees a 1.5% spread, opens a hedging position, earning $300 after convergence, right? No market predictions required. So that's what you get really when you're doing arbitrage. Then you got funding rate arbitrage, perpetual futures, paying traders every few hours, right? It's funding is positive, short receive payments. Professional funds literally run billion-dollar positions purely to collect funding. And cross exchange arbitrage, which is the third type of arbitrage here, where listing and news events cause market temporary price gaps, right? So one token trades maybe at a higher multiple on a DEX than on Binance, that's not trading yet, right? So the problem traders face, like I said, it's always the execution. The opportunities only last a few seconds. The spreads are random. Monitoring across all exchanges is very difficult. So that's where you need tools like Arbitrage Scanner, which really kind of gives you a no API access, so your funds actually stay safe. The platform never touches your money, no withdrawal permissions, they no automated the risk there, and you get 2-second real-time alerts as well across centralized exchanges and DEXs, across 500 DEXs. 90 blockchains, spot and futures strategies are also built in, and you've got so many tools, right, that you get with Arbitrage Scanner, like the perpetual arbitrage screener, the DEX arbitrage scanner. You've got the funding rate mechanisms that really kind of give you a good grasp on how to capitalize on the arbitrage in the crypto market. So if you're a beginner or pro trader, this is a tool that you want to explore. Check out the link to Arbitrage Scanner. Check out the link to the full review so you can get more in-depth on how to actually do arbitrage training. The link is in the description. I'll see you guys next time. Peace.